I'm Eric Birch with miningclips.com, and I'm here at the PDAC Mining Convention in Toronto, and we're speaking with Mark Billings, the chairman and CEO of Canamex Resources, and that's CQS on the TSX Venture Exchange. Welcome, Mark.
Thank you very much. It's a pleasure to be here.
You've just announced your preliminary economic assessment on your Bruner Gold project. Tell us a little bit about the results.
Well, the results we think are outstanding. This follows our initial 43-101 resource estimate last year. And based on the amount of gold we have to date, we have a NPV, net present value, of $61 million US, internal rate of return of 42%. And those are very good numbers in our view for a small resource. Plus we have a low operating cost to produce an ounce of gold. Initially it's about $550 US per ounce. That goes up to about $800 later on, but we're able to capture the higher grade, the lower cost gold initially, and that gives us a payback on the capital equipment of $33 million of just over a year. So in this market, as you can appreciate, raising money is difficult. Raising a lot of money is even more difficult. This is a good, small operation, and we still have a lot of potential on the property. We've only explored about 20% of the Bruner Gold property, and based on those results, we've identified what, on a preliminary basis, looks to be an economic resource, and we want to move that towards development and then use internal cash flow to continue to explore on our property and hopefully identify more gold on the property.
Right, and so as a preliminary economic assessment, you've probably used some indicated resources as well as some inferred resources. Do you have plans to upgrade part of that resource?
Yes, absolutely, and that's one of the recommendations that will be in the full report. Right now we just have the numbers and some recommendations, but the full report will be in the public in about 45 days. Over the last couple of years, we've had two new discoveries from the historic area where a lot of work has been done in the past. We've gone to the east and to the north and have two new discoveries. And the one to the north, in the drilling campaign in 2014, had some outstanding results. We were getting 5, 9, 10 grams per ton, and we didn't have enough data to put that into the indicated resource. But all indications are that there's still a bit more work to be done there. So I think what we want to do is get a bit more financial resources into the company and then do some more drilling, definitely on that part of the property, which shows tremendous amount of promise. And also that's near surface. 20 feet below the surface we hit gold. So again, that's much more economic to harvest. And again, that's just part of the potential that we see in Canamex. I think as a shareholder, I'm happy with the results we have to date. I think our shareholders should be. And I think what gives us promise is that there's still a lot more work to be done, a lot more potential on the property. And of course, you need time, money, drilling to validate that, which we hope to achieve this year.
Well, that sounds fantastic, and congratulations on the results of your PEA. Very, very high internal rate of return. Generally, if it's 15 to 20, people call that robust. At 41%, it's extremely robust.
Well, that's it. We met some financial guys today, and they're looking at financing projects that have at least a 20% IRR, and we're double that. And we think there's still room for improvement. I mean, this is a preliminary study. And thankfully for us, we have a very good technical team, and we can probably shave some cost off. But even on this basis, on a standalone basis, a preliminary basis, these results we think are great, and I think it positions Canamex for hopefully a very good 2016.
Well, thanks for joining us today, Mark. Very much appreciated, and we'll be keeping an eye on you.
Thank you very much. Appreciate your time. Thank you.
For miningclips.com, I'm Eric Birch.